So the title of today is why IBC is not an investment, and that's the point. So, let me just start by saying, start with this. IBC is not an investment. If somebody's trying to sell it to you like an investment, then run. And the reason I say that is it's not about an investment. So we're gonna kind of tackle this investment versus infinite banking. Let me just, start. It's kind of like saying, kind of like calling the gas in your Ferrari the engine. No, it's the fuel. If you're looking to build wealth, infinite banking is the fuel system. It's not the in. I mean, we're creating things and we're changing some stuff up to say wealth engine because altogether it's like a system. It's like a car. It's like a wealth engine, right? But control beats returns. Banks know that. And becoming your own banker is the most powerful move that you can make because it eliminates the middlemen that steal from you. And who is that? We all know Wall Street, big banks, and even small banks, and Uncle Sam, right? So let's start by talking about what is an investment. And the definition of investment is the potential to lose whatever you put in it, right? Lose it all. So when you risk money and you have hope of a gain. So it could be stocks, mutual funds, bonds, could be private equity, could be REITs, can be stuff like that, right? Where you have no control. But all of those things have four traits that they share. And one, they can lose value. Okay. In infinite banking, the fuel, which is the policy, can't lose value, right? And the policy, which is the fuel, feeds the engine. The engine altogether is the different pistons that you have, the assets that you're buying. The other thing that investments have, traits that they have in common, are they are subject to outside forces, meaning you don't have control. Three, they have variable rates. And again, you don't control the outcome of whether that investment goes up or down. If you're hoping that the market works in your favor, that's not a bad thing. I mean, you're hoping that the market goes up, but don't confuse it with control. Don't confuse it with, well, that means long term, I'm going to make money, because that's what the four lies that Wall Street tells you. Okay. It's the long run that matters. And the translation to that is ride out our mistakes and stay poor longer. The second lie is average versus actual rates of return. They show you on reports that you averaged whatever, but you can't spend average, you spend actual, and your actual rate of return always is less than your average rate of return. Another thing that they lie to you about is your home is an investment. Your home is a liability. It costs you money. You get something for it, but it's still a liability. A car is a liability. Most cars are a liability. Every house that you live in for you is a liability, right? It could go down. Does it go up over time? Well, this house that I'm sitting in it right now has doubled in value since 2020. Okay, but now it's not going up, right? So is it a liability? It's a liability that it could go down. It could go down lower than what I bought it for, right? Here's the fourth lie. I always love this one. You have to take risk. You have to risk money to make money. No, you have to control money to multiply money. Wall Street is sold as that volatility is normal because it's profitable for them, not for you. Because if there's volatility, you want somebody to control it. So you give them control to make sure that you don't feel like you're the one that lost the money, if that makes sense. Like, you don't trust yourself to do it, so you give it to them. You give them control. But IBC is not an investment. It's a system. It's a private, contractually guaranteed, liquid, tax advantage cash flow system where you control the capital. Okay, here are the key traits of that versus the key traits of Wall Street and the investment. Guaranteed growth, compounding, not guessing, uninterrupted compounding, okay, which Wall Street cannot promise, offer, or deliver. Tax-free access, loans, not withdrawals. You can withdraw up the basis, but I don't want to confuse you with that. Private contracts, it's not tied to Wall Street, banks, or any other government program. All right, it's private. It's between you and the insurance company. Use and control of your money while it continues to grow. So you get to use it as collateral so that the insurance company will give you their money. So now you have other people's money, and you can go out and invest in things that eliminate your need to exchange time for money. So it's not designed to beat the S&P 500. It's designed to beat the bank, to replace the lender, not the stockbroker. If nothing else gets through, that's what I want you to listen to. Is it's not designed to beat the S&P 500. It's designed to beat the bank, to replace the lender, not the stockbroker. So the real problem is that you've outsourced the banking function, and most people have. So let me ask you this. Who's making the most money in every deal that you've ever done? The business owner? The investor? No, it's the bank. Who makes the most money in every war? The bank. They finance both sides of every war. And whether you buy a car, a business, real estate, or a stock, the bank gets paid first and it's guaranteed. And what I mean by that is the bank isn't going to give you money without collateral, and they're in first position. So now that that's the function you've been trained to outsource. But IBC is about taking that function back. You become the bank. You earn the spread. You recycle the dollars, creating velocity of money. You build a warehouse of wealth, because you're building this warehouse of any time that you need capital. And it's not about chasing ROI, return on investment. It's about building a system that never leaks. Okay. It doesn't go backwards. Okay. So it's not save up money to this magical number and then live off it for the rest of your life and hope that you don't run out of money. Okay, that's a lie. That's what they want, because that enslaves you to Wall Street. The real wealth equals velocity and control. Well, wealth doesn't come from rates of return. It comes from velocity of money, which is how many times your dollar works for you and how fast you can create more and more streams of your dollars working for you. That's creating velocity. Control of money. Who decides when and how it moves? The bank? No. Wall Street? No. Government? No. You. It's not in any of those things. Okay. So traditional banks and Wall Street slow you down and lock you out. IBC speeds you up and locks you in. It locks in your control. You don't just grow money, you move it, multiply it, and use it without breaking compounding. Normally, that lost opportunity cost because of breaking compounding is creates this lack of transparency on what your actual rate of return is. Okay, so why does IBC beat the bank, Wall Street, and the government? And so what we're going to do is I'm going to give you a feature, and then I'm going to tell you what banks, Wall Street, government, IBC. Okay, so I'm going to say, like, for instance, control. Banks if you use traditional banks, they have it. If you use Wall Street, they have it. If you use government programs, they have it. Like in a 401k, they don't tell you what your tax rate's going to be when you take it out. But if for control in IBC, you have control. Okay, so does that make sense? So I'm going to say control, and then the banks, they've got it. Wall Street, they've got it. Government programs, they've got it. IBC, you have it. Access. With the traditional banks, it's limited, because if you're using something as collateral, you might not be able to use it. Or if you have an asset that you've pledged or whatever. Wall Street, it's limited because of timing. Yes, you can get your money out, but is it a good time? Is it the sequence of returns? Does it, what just happened yesterday in Wall Street? Does it make it, oh, wait a minute, I can't buy that house, or I can't buy that business because it's a bad time for me to take my money out. The market's down. And in government programs, the access to your money is age locked. I'm past the 59 and a half. If I had a 401k and all that, I could start taking money out without penalty. I mean, but that's at 59 and a half. IBC, you have access anytime. Don't have to ask for it. Guarantees, bare minimum guarantees with the banks, right? And they would tell you FDIC insured. FDIC is so underfunded, it's not even funny. It's less than 1% funded. Your money is not safe and protected there. Wall Street, you have nothing, none, no guarantees. And then the government programs, it's unreliable because we don't know if they're going to seize these accounts. They seized gold in the 1930s. Right? I mean, they seized gold and they said, if you have physical gold, turn it in at this value. 90 days later, they reestablished the value much higher when they had all the gold. Stupid. So the guarantees are contractual with IBC. Taxes. Traditional banks always taxed. Nothing in traditional banks that's not taxed. On Wall Street may be deferred depending on, if you have some kind of bonds or whatever. Government programs always tax, either now or later. And with IBC, it's tax-free if you do it right, if you don't let the policy lapse or something. Liquidity. With banks, it's poor because you're not gaining anything. I mean, yeah, you can go down and get your money, but you're like if you want to get a little bit higher rate return and you do a CD or something like that, you're going to lose. In Wall Street, it's market based. Is the market up or down? Then I'll tell you what your liquidity looks like. And then government programs, it's after you're 59 and a half. And I know 59 and a half seems really young and then it comes by so fast. Or is that just me? In IBC, liquidity is immediate. We've had people get loans the same day. Privacy, my last point. Banks, it's public. Wall Street, it's public. Government programs, it's government owned. They're your partner. It's not private. With IBC, it's between you and the insurance company. They're not reporting anything to the IRS, right? It's between you and them. So let's just bring all of that together and remember some of the things that we've been talking about the last few weeks is own the system, don't play in it. The other things that I talked about, whether it's Wall Street or the banks or the government, they make the rules, you play by their rules. When you're building your IBC system, you build the rules, right? Rich people don't play by the same rules. They don't. They build the rules. They build the system. What did Nelson say? You finance everything you buy. You either pay somebody else interest or you give up interest you could have earned somewhere else, no exceptions. And he put that last part in there because it's really, really important. IBC is not about products, policies, which insurance company says that they're going to pay you the highest dividend right now. It's about process. It's about controlling your money. It's not about return. It's about control. It's not about investment. It's about the system that makes your investments better because of your control. And if you're ready to stop playing somebody else's game like everyone else, and you're done giving banks, the IRS, the first cut of every deal, and you really want to finally own the bank in your life, then talk to one of our coaches, because when you own the system, you're never going to have to compete again. You're creating, not competing, if that makes sense. You're creating a new system, and it's a private system. You're the depositor, the owner of the bank, meaning you're in control, and you're the borrower. It's closed. So if there's no other people in the system other than you, then how does anybody make any money off of you? They don't. And if you're the only entities in the system, then how do you lose money? You don't. Now, by the way, could you lose money because I went and invested in real estate or a business, and that business or real estate lost money? Yes. And if Shohei Ohtani gets up to bat one time, or Aaron Judge gets up to bat one time, I'm not willing to bet they're going to get a hit. But if you tell me they're going to get up 10 times, I'm willing to bet that they're going to hit more than they're going to hit higher than 300. But in buying things like real estate, businesses, etc., you can hit closer to 700 because the outside forces. There aren't all these different pitches. It's really just these factors that are coming against you, and they're limited. That's why IBC outperforms an investment, and it's why IBC is not an investment, and that's the point, right? So, all right, I'm going to go look at these. Any questions? Love that. So Nathan says, I can see this being so valuable to people doing regenerative farming and agriculture. Homesteads need this bad. Totally agree. Yeah, Matt, these are on Zoom now. I'm glad that we'll make sure that that's on there more. Angela said, so true, Nathan. So I did a solo podcast this morning. I recorded it. I don't know when it's coming out. Heather could tell us. And the one thing I was talking about, and I talked a little bit about this before everybody got on, is peptides, right? So I've been reading a lot about peptides, looking at different sources, kind of playing around, watching my blood work and everything, and seeing like if I combine these peptides, what kind of results I'm getting. It's the same way with building wealth. You study to where you think you know what you should do, like what you think you should invest in, right? Okay, I think I should take these peptides. So I'm reading about them. And once I get that in my head, that it feels clear that that's the peptide I should take, then I take them and I mark exactly. I mean, I put in my bullet journal when I take them, and it'll tell you empty stomach or after a strength building or before fasted cardio, whatever it is. So you take them and then you watch your blood work, watch your weight, I mean, like it's hard, but I mean, take measurements and watch, and you watch your measurements, right? Are they going up in the right what places and down in the right places? Or is it the opposite? And then you think, okay, I didn't feel really any positive with that peptide. So I'm going to try this or this or this. Or, it's the same way with supplements, same way with food, right? I had this conversation the other day is if you go eat a Big Mac, it's 12:21 Eastern time. If you go eat a Big Mac and I don't care what happens this afternoon, you are not going to feel good. There is no scenario where you eat a Big Mac and you feel good after eating that Big Mac. Now you eat some lean protein or even a little bit not so lean protein like a chicken thigh, which I had for an early lunch before this meeting started, and some cottage cheese. I feel good. And I know 2 hours from now, I'm going to feel good because I'm not putting all this stuff in my system that doesn't make me feel good. So then I feel like doing more. It's the same way in your IBC system. Input will eventually create output, right? Results. It's just a matter of time. But the more that we study it, the more that we read about it, the more comfortable we are, the less fear we have to take action. So that's kind of what I want to leave you with today is in the community, there's lots of information that you can get for free. You can interact with all the other people in this community. Hey, what are you doing? I'm thinking about doing regenerative farming in agriculture. Well, hey, I have somebody, I mean, like that, this is what happens. Your net worth is in your network, right? I have somebody that's doing that in Ohio or here. Now, all of a sudden you have 3 or 4 people that are doing the same thing. So now you want to feel better about whatever action you're taking, whatever investment that you're using your infinite banking system for. Well, you got Nathan that's already done it, or you got Angela that's already done it. And here are the results. Here's the mistakes I made. You're like mentoring each other. That's what a community does. And that's why we're going to focus more and more on growing this community, because the more people that we have in the community doing this, the more partners you have, the more knowledge and education you have. And that's, again, anybody that was on a couple of weeks ago, or maybe it was last week when I did the voice, vision, obstacle, all of that is that system, getting that vision. What do you want? I just asked somebody that question the other day and they said, I want my calendar to be empty. They really don't, because I've had my calendar empty. It's kind of boring, but they want to do what they want to do when they want to do it. They just don't know how to express it. And that's what we all want. We want more money than we need to come in, so that and this was the topic of the podcast. Financial freedom is where it starts, not where it ends. So you go financial freedom. Once you have all that money that you need coming in, right, for your lifestyle, whatever your lifestyle is. I'm not, I don't decide that. No one else decides that. You decide that. But once you have your money coming in that you need for your lifestyle, everything else is impact on your community, impact on your church or synagogue, impact on your family, impact on your future generations, impact. So financial freedom is just the beginning. It's not the destiny. Infinite banking helps you get there more efficiently than anything else I've ever seen, other than getting lucky. And luck is not a strategy, just like hope is not a strategy. Thank you. Oh, there's a new message. Voice. Oh, thank you, Kyle. Yeah, voice. For everybody that wasn't here, let me just kind of go, since we have just a couple of minutes, I'm going to go through, where did I put that? I'm going to go through the voice stuff real quick. We'll just go through it. If anybody wants to stay on, there's a way to search my notes. All right, maybe not. No, there it is. Okay. So just to go through it, vision, see the end or be ended is what I wrote. Okay. If this works, your vision, your life will be unrecognizable in 5 years, and it should scare you, right? Obstacle, name the beast. It might be in your head. It might be mindset, whatever. Name the beast and then train to kill it. Identity. I said this to somebody the other day on our team. That old person has to die. Burn who you were. Okay. If you were overweight, then you're not overweight anymore. That person is dead. Now you're going to act like the person that you want to look like. I'm not telling anybody what they should do or not do, but what does the version of me who's already done this believe, think, and do daily? If I'm going to be that 70-year-old that has 8% body fat and is benching 300 pounds, what do I do? How do I act every day? When do I get up? What do I eat for breakfast? And start doing that. And then once you get that and you've killed the current person, then it's commitment. right? This is where 99% of people quit. Go public. You know, I talk to people about abs on here. I talk to people about peptides, talk to people about the new book, which the new book, the digital version, I think is going to be done this week. And then we'll be able to order in the next couple of weeks, like hardcovers or I think hardcovers, but maybe paperback. So you got to burn that boat. This is where 99% of people quit because they don't believe they can do it. Okay. This last part, maybe the most, I mean, all of them are important steps. Daily, small, little wins, right? If it's, again, I always do it health or weight loss. If I decided that I'm going to be that person in 10 years or 5 years or 3 years that I've created a vision about, then what's 1, 2, 3, 5 things I can do today? Take my dog for a walk, get so many steps in, lift weights, burn so many calories and gain muscle, right? Eat. Like just if I did those 3 things today, that'd be a win. And so if you take that and you say for the next 90 days, I'm going to pick one thing, which is what we talked about last week. I promise you, you'll make it happen. Just one thing. It's not 15 things. That's too hard. Okay. So, do you have a real estate lawyer you would recommend? Yes. Yes. Peter, we can get you a couple of different real estate attorneys. Depends on if you could send me an email or a direct message in the community on kind of what you need the attorney for, then I can give you a better recommendation on which attorney I would start with. Okay. All right, guys. Thank you so much for being on here. We're going to make sure that everybody knows that it's here. I appreciate you pointing that out, Matt. Peter, if you're still reviewing the book and you want to give comments, just give them because it's all digital right now. So I just did comments last week with somebody and they had like 1 or 2 things that they pointed out. I mean, like, I'll give you an idea. One was ROI. Like it just says ROI. It didn't say what ROI is. So now we just added that. So if there's little things, we can add it. If it's like, hey, this doesn't make sense, we can still change it because until we start printing, and then if there's something wrong, I mean, last time we printed all these books and then there was somebody's name was misspelled and it's like, oh my gosh. And, so we can revise it even after the fact. So hope that helps everybody. And I hope everybody that has reviewed the book has enjoyed it, getting really good feedback from everyone. I'm super excited to get it out there in the public and start helping more and more people. So thank you all for being here. And you've got to win Monday to win the week. That's how we end it every week is to think about that. I mean, it's halfway through Monday. So we got to win now. Well, what are we going to do in the next 5 hours or 4 hours or whatever you're going to work to win? And so let's just get it done. So thank you all for being here. Godspeed. We'll talk to you soon. Bye.